I want to talk specifically to business owners today, especially if you're a company doing $1, $3, $5, $10 million in revenue. Let me ask you something. If your business is making millions of dollars, why does it feel like you're always short on cash? Think about that. The revenue's coming in. Then you have the payroll, taxes, rent, equipment, inventory, insurance, credit cards, debt, marketing. Then suddenly your accountant says, you had a really good year. And you're thinking, great, then where in the world's all the money? If you've ever asked yourself that question, this lesson is specifically for you because there's a massive difference between revenue, profit, cash, and the fourth one, financial control. And business owners need to understand all four. Welcome to another financial lesson from Banking for Legacy. I'm your host, Nelson Pizarro. Every Tuesday, we're having conversations about money that I believe families and business owners should be having. There's zero hype. There's not a get-rich-quick strategy. It's all education. Because the more you understand about your money, the better decisions you will make with it. Our mission remains very simple. Create greater financial control, build wealth, and leave a lasting legacy. Today, we're going deeper into the business owner side of that conversation. Revenue can lie to you. So let's imagine two businesses. Business A, 1 million in annual revenue. Business B, 5 million in annual revenue. Which owner is wealthier? I have no clue. Which business is healthier? I still don't know. Which owner has more cash? You don't know either. We love revenue because it's easy to brag. We crossed the $1 million mark. Awesome. But what did it cost you to make that $1 million? What's your profit? What about your debt? What's the tax obligation that you have? How much working capital do you need? How much cash is actually available? That's the financial education I want business owners to think about. Now, revenue feeds your ego. Again, revenue feeds your ego. Cash flow feeds your business. And liquidity gives you options. Go ahead and screenshot that one because that's three completely different things. This is something I understand personally because I'm not just sitting here talking about this by theory. I've been in business and I'm in business right now. And business cash flow can be so strange. 1 month looks so amazing, then the payroll hits, taxes are due, a piece of equipment breaks, you need more inventory to purchase, an unexpected AC breaks, and suddenly you're thinking, wait, weren't we just doing great? That's why I stopped looking only at how much money comes in. I started asking, where is this money going? What's available, what's committed, what's protected, and what's the next job for that dollar? Now let's call this the business owner's cash trap. And here's a scenario. Let's say your business has $300,000 sitting in cash reserves. That's fantastic. But now the owner starts asking, what should I do with it? Getting a high yield interest? Do I just invest it? Pay down some debt? Buy some more equipment? What about buy another vehicle? Hire somebody else? Open another location? Do I just put it in real estate? Do I distribute it to myself? Here's the problem. There isn't one universal answer because before we decide what to do with that $300,000, you need to understand what job that money has. And here's what happens. Cash sitting in the bank without a purpose isn't a strategy. But putting every dollar to work and having no liquidity isn't a strategy either. The answer is not automatically invest everything, and it isn't save everything. It's build a system. How much cash does your business actually need should be one of the questions. This is where I want business owners to grab a piece of paper and ask yourself, what does it cost to operate business for 1 month? Not the revenue. The expense, payroll, rent, debt payments, insurance, utilities, inventory, software, everything. Let's say it's $100,000 per month. Now ask yourself, if revenue disappeared tomorrow, how many months could the business survive? Is it 1, 2, 3, maybe 6 months? Now, that's what we're going to call your runway. And your appropriated reserves isn't necessarily the same as another business because business have different cycles. They're seasonal, the debt, the margins, access to credit, and the revenue. Here's another one. Your cash reserve isn't lazy money if it has a job. Sometimes it's a job so simple. Just keep the business alive. That's super valuable. The business owner who buys things just for taxes. Business owners have a profitable year. They talk to somebody in here, you should buy something before the end of the year. So you end up buying a new car, equipment, maybe some machinery, technology, or whatever else. And sometimes that absolutely is legitimate business decision. But I want you to ask a different question. Would I buy this if there was no tax deduction? That's important because spending $100,000 solely to reduce taxable income doesn't magically make you $100,000 freer. You're still spending money. Tax treatment matters, but the purchase should make economic sense for the business. Here's another rule I want business owners to remember. Never spend $1 just because you're afraid of paying tax on part of it. First ask, does this purchase make my business stronger? That's a completely different conversation. Now let's talk about opportunity. Let's say you have a $300,000. Then something happens. A competitor calls you and says, hey, I'm retiring. They'll sell you their customer list and equipment at an incredible price. Pennies to $1, let's just say. Or what about the building next door becomes available and you really needed it? Or you acquire another practice. What about you bought a piece of land, you build your house, and all of a sudden the land next to you becomes available? Or there's another opportunity to just expand. You know exactly what to do with it, except all your money is tied up. Now what? You go to the banks. You get a line of credit. You have the SBA loans. You call a partner or an investor. You use your credit cards. All of those may be legit options. But the question becomes, how much financial control do you truly have? Now, this is the same framework I like business owners to start thinking about. Instead of seeing one giant pool of cash, think about 3 pools. Pool number 1, we're going to use that one or call it operating capital. Money the business needs to just function. The payroll, the bills, the inventory, normal operations. Don't gamble with this money. Then you got pool number 2, emergencies, reserves, and capitals. Money that's there when something goes wrong. Economic slowdown, maybe lost customers, equipment failure, unexpected expenses. This is money that buys you time. And in capital 3, opportunity capital. This is where things get super interesting. Capital specifically positioned so you can act when opportunity appears. It's that expansion, that new equipment that you could get a super discount because you paid in cash, real estate opportunities, acquisitions, hiring, marketing maybe, whatever makes sense for your company. Business owners don't just need emergency funds. They need opportunity funds because sometimes the biggest financial emergency isn't something going wrong. It's an incredible opportunity appearing when you don't have that capital to act on. Here's where banking systems can enter this whole conversation. Now, we get into something I spend a lot of time educating people on. Could a properly designed permanent life insurance policy become one component of the business owner's overall financial system? Absolutely. Certain permanent life insurance policies can accumulate cash value. Depending on the policy design, owners may access available cash value through policy loans. Meanwhile, there's also life insurance protection. That's why I became interested in this personally. I started asking, could some of the dollars I'm already setting aside for the future opportunities have multiple jobs? Could part of my strategy be provide protection, accumulate cash value, maybe give me another source of accessible capital, and create a discipline around repaying money after I use it. That's where this gets interesting. But there's a cost and there's a trade-off. Premium commitment, policy designs matter, policy loan charge interest is something you should learn about. Outstanding loans affect available value and death benefits. And this isn't automatically appropriate for every single business owner. First, education. Second, strategy. Third, product. I tell a lot of people, becoming your own banker is really about behavior. Here's a part people miss. The concept isn't simply just borrow money from a policy. The bigger idea is stop stealing from your future self. Let's say that business needs 50 grand. Maybe you access capital from your financial system. Great. But then what? Most people spend the 50 grand and just move on. Instead of asking, how am I going to replenish this capital? You can create a repayment schedule. Because if you continuously take money, never rebuild it, you don't have a banking system. You have another spending account. This might be the biggest lesson today. The goal isn't to borrow from yourself. The goal is to build a system that forces you to pay your future self back. That's a big difference. Now, I want to use one industry as an example. Let's say you own a dental practice. Maybe you're doing around 2.5 million in revenue. You've got the employees, the hygienists, the equipment, you rent or even own a building. You have your insurance, the marketing, taxes. Maybe you're sitting on 250,000 in revenue. Now what? A new $80,000 piece of equipment could arise. What do? Do you just pay in cash? Do you finance it? Use a line of credit? Lease it? Maybe you have to access capital from another part of your financial system. I don't know. And nobody who gives you the answer without knowing your entire situation doesn't know either. But a couple great questions could be, what is the interest rate? What's my liquidity after I purchase? What return could this equipment potentially generate? What's the tax treatment? What's the opportunity cost? How quickly can I replenish the capital? What happens if the revenue just falls? That is financial strategy. Now, stop asking, can my business afford it? Ask, what's the smartest way for my business to finance it? That's how owners start thinking differently. Your business should fund your financial future, but your business shouldn't be your entire financial future. Here's my challenge to all the business owners. If you're a business owner listening today, I want you to answer this question and write them down. 1, what did my business generate in revenue last year? 2, what did I actually keep? 4, how many months could I operate if revenue stopped today? 5, how much cash is sitting in the business right now? 6, what specific job does that cash have? 7, how much of my capital is available for opportunities? 8, if a $100,000 opportunity appeared tomorrow, where would the money come from? 9, after I use capital, what's my system to rebuild it back? And finally, 10, if I disappear from my business for, let's just say 6 months, would my financial system still work? That last question should tell you a lot. Finally, business owners, you spend years learning your craft. You could be a dentist, a contractor in the medical field, a lawyer, real estate, manufacturing, whatever it is. You became really, really good at making money. But now it's time to become equally as good, controlling it. Because making millions in revenue isn't the finish line. Building a system around those millions is. If you're a business owner doing roughly $1 to $10 million in annual revenue, this is exactly the type of education we're going to be doing more at Banking for Legacy. We'll talk cash reserves, financing, taxes, liquidity, business protection, opportunity capital, life insurance, banking systems, and ultimately, how to make the success you have created inside your business and turn it into lasting financial control outside of your business. If that's you and you want to hear more, just go to my website, bankingforlegacy.com, and schedule a free business banking strategy conversation. We're not starting with product. We're starting with your business, your cash flow, your goals and your challenges, and the financial system you're trying to create. If you know a business who needs to hear this lesson today, send this to them. New Banking for Legacy financial lessons are every Tuesday, and remember, create greater financial control, build wealth, and leave a lasting legacy. Thank you.